What's going on, guys? It's Andy here. Welcome back to the 100th ever episode on the Andy Kindola Show. I'm excited, guys. In this video, I'm going to go ahead and reveal my full stock portfolio with you guys. It's been a journey and a half. We started this portfolio, and actually, I started this portfolio when it was at $100, and I started recording everything in regards to this portfolio when it hit $10,000. If you guys look at my first ever video, it was actually around Warren Buffett and how he sold out of the airlines. So we started at 10,000 and now the portfolio is starting to go ahead and hit all-time new highs, which I'm going to go ahead and reveal in this video. So currently the portfolio is at $160,815. Just in the last day, we've made about $1,200. The market is slowly rebounding. As of this morning, the market or the Nasdaq is up 121 points, sitting at right around 14,800, and the Dow Jones futures are also up about 200 points, or sitting at about $34,462. So that is pretty impressive that the market is still holding up. I was expecting a bit more of a correction, and hey, there could still be a correction as we get into the end of the year, but as of right now, it's holding up and the portfolio is holding up, and hopefully we'll see new highs in the coming future here. Now, as far as in the last week, the portfolio is up about $2,200. In the last month, portfolio is up about portfolio is down about $78. In the last quarter, the portfolio is up $3,471. In the last 1 year, the portfolio is up $14,158, and then since we started this portfolio, it's up $21,893. Now, it's nice to be sitting at $160,000. I'll tell you guys, there is one little trick to this, and that's literally called dollar cost averaging. Basically, guys, every single day in my portfolio, I like to go ahead and invest in the market and just dollar cost average. As you guys can tell, I have a $100 trade pending for today. If you watch my videos, you'll see basically every single day, either before or after my video, I go ahead and invest, and it's usually around $100 a day. But when I started investing, it was $100 a week. And I've slowly grown how much I'm investing in this portfolio because the focus is to go ahead and grow this portfolio. So that is to tell you guys that anybody can go ahead and do this, and there's no secret recipe here. It's just dollar cost averaging into the portfolio and let the market do its thing. Now, I like to go ahead and niche down and focus on individual stocks. So in my portfolio, I have individual stocks. I'm not into ETFs or mutual funds as much because I like the idea of just owning shares of companies that I truly believe in. I believe in their growth potential and companies that I just follow and like. Now, we're going to jump right into it because I don't want to make this video way too long, even though it is our 100th anniversary. What? All right, let's go ahead and jump into it. Now, in regards to the growth pie, I have basically my portfolio broken up into different pies. My growth pie is a large percentage of my portfolio. It's about 50% of my portfolio. And then from there, I have the portfolio broken up into the other pies of the S&P 500. So I have 25% in my technology pie, 6% allocation in financials, 5% in real estate, 4% in consumer staples, 4% in consumer discretionary, 4% in communication services, 1% in utilities, and 1% in healthcare. Now in total, I have right around 35 stocks in this portfolio. But jumping into my favorite pie and the pie that has the most potential. And with this pie, I have some of my favorite companies in here with 5 200x growth potential. All right, I think I said growth way too much there. But let's jump into the first one. The first one's going to be Tesla. Now, Tesla is a position that I am growing. I have a target allocation of 37% in this company. I'm up $4,000, and my current value is sitting at $30,301. One of my favorite companies, one of my largest companies in my portfolio. From there, we got Roblox. I love this company as well. I do believe that Roblox still has at least 10x growth potential, especially as they grow their metaverse. And the current value in Roblox is sitting at $4,090 in my portfolio with a 5% target allocation. From there, we got Netflix. This is a stock that's been doing extremely well, especially because Squid Games is one of the new series that they started, and that series just literally blew up. I watched it, guys. it's a extremely good series. It is worth definitely watching. But Netflix, because they're dumping so much money in their content, this company is starting to do extremely well. I am very bullish on Netflix and their future. As far as my current value, sitting at $3,762, up $500, and have a target allocation of about 5%. Now from there, I have Airbnb with a 3% allocation. I used to have a higher allocation in Airbnb, but I cut down on this recently because I see other potential in the market for quicker and higher growth. So Airbnb currently sitting at $3,700 in my portfolio, up about $70. And I did go ahead and increase and take that 2% from Airbnb and allocate it to Coinbase. So Coinbase, I have a target allocation of 5% as well. Currently sitting at $3,667 as far as my value goes, down about $600 in this company. I believe this company still has room for growth because it's one of the easiest companies to go ahead and invest in to get into the cryptocurrency space. So very bullish on Coinbase and their future. From there, we are going to jump into CrowdStrike. CrowdStrike is another one of those companies that's been a little quiet lately, but love this company as well. I have a 3% allocation towards this company, up about $680, and have a current value of about $3,500 in this one. Now, jumping from there is going to be in Shopify. Shopify is one of my favorite companies as well because they make it extremely easy for the consumer or for small business to go ahead and create a shop online. And this company just has extremely good reviews as well. Now, the current value is sitting at about $3,000 in this one. Target allocation 3%, up about $600. Going down from there, we got Uber. Uber is diversifying themselves as well. Uber recently is pushing and doubling down on Uber Eats. My current value is sitting at $2,360 or down about $195 with a target allocation of 3%. Now, jumping into the next one, this company seriously got hit because this is one of the companies that I'm actually losing the most money on. And I wasn't expecting to be losing this much, but this, I guess, was more of a pandemic play. But in any case, I'm a believer in Peloton. I like this company. I do like their marketing. I do believe that Peloton can go ahead and roll out new products, especially with their merger or their acquisition, I should say, of Precor. So Peloton, there's still, in my opinion, room for growth. This is a company that I'm not adding on to right now, but still extremely bullish. So I am going to be holding on to this for a long period of time. But my current value is sitting at about $2,300, down about $1,500 in this one, and have a target allocation of 3%. From there, C Limited, love this company as well. This company is extremely diversified. They're in the gaming space. They're also in the financial space, and they're also in the shopping space with competition for Amazon, so you can shop through their app as well. And this company is exploding, and this is a company that has a great presence, not currently in the US but internationally. And my current value in this one is sitting at right around $2,300, up about $700 in this one. Target allocation is going to be 3%. Now from there, I do got Robinhood. I invested in Robinhood when their IPO came out. Have a total value of $2,200 in this one, down about $200 with a target allocation of 3%. And then guys, from there, we're going to jump into Salesforce. Salesforce is another one. This is a quieter company that I believe can explode anytime. This company's making all the right moves. They want to be the #1 company in their space. I have a target allocation of 3% in this one as well, and about $2,200 in value, up about $145. Now, from there, we got Square. Square is a Jack Dorsey company along with Twitter. So both of these companies are owned by Jack Dorsey. Honestly, I like Jack Dorsey. I like everything he's doing. He is extremely innovative, and that's always a plus for a person that's running a company. So he's making a lot of great moves in regards to Square as well as Twitter, with both of these companies sitting at a current value of right around $2,000. With Square, I'm up, and then with Twitter, I am down. Twitter, I'm down about $200. Square, I'm up about $90. And both of these companies, guys, I have a target allocation of 3%. Now, jumping down from there, we got Etsy. Etsy is another online marketplace, but they have very unique products. Like this company as well because I do believe that they have a great moat. Now my current value is sitting at $2,000 in this one, up about $72 or about 3%. Jumping down from there is going to be in the housing game with Zillow. Zillow is still the cream of the crop when it comes down to their sector. Have a current value of $2,000 in this one, down about $700 in this one, with a target allocation of 3% currently. Now, we've already talked about Twitter. Jumping to the next one here is going to be Twilio. Now with Twilio, I have a current value of $2,000, down about 2% or about $50 with a target allocation of 3%. And jumping into the next one is going to be Lemonade. Lemonade, I am actually surprised this company's hit this much. I do believe that I just bought into this company at the wrong time when the hype was there and this company was hitting all-time new highs. But at the end of the day, I am a believer in this company as well, guys. This company, when they come out with auto insurance, I believe that's going to be a whole new sector that they can go ahead and dominate. And this is just the start for Lemonade because this company is growing internationally, unlike a lot of the insurance companies that are really focused on narrowing down in a certain area within the US. Now, with Lemonade, have a current value of $1,800, down about $2,000. And I do believe that this is the largest company that I'm losing money in. But with this company, have a target allocation of about 3%. Now, jumping down from there, these are actually the two newest stocks that I've recently added in the portfolio, so I'm still trying to go ahead and grow my position in these. But the next one's going to be ASML Holdings. They are the largest manufacturers of semiconductors, so I like this company. Same thing, see a huge growth potential in this one. Have a current value of about $1,800 in this one, down about $96 with a target allocation of 3%. And then finally, I got Palantir in here, which is a stock I recently added. Have about $900 in value, down about $64 with a target allocation of 3% as well. But these two are the ones that I am focused on growing currently. With Palantir, I believe the stock again has been hit. I do believe that Palantir is a little bit riskier of a play, but the potential reward with this one could be huge because this company has a lot of contracts and they have a lot of things in their pipeline. But guys, as you can tell, these are the different growth stocks that I have in this portfolio, and this is one of my largest pies in my portfolio. But now, jumping into the next one, we have technology. In technology, I have 5 stocks, and these are going to be the cream of the crop. Basically, Apple is one of my largest positions behind Tesla. With Apple, I have a value of $20,000. I'm up about $4,600 with a target allocation of 60%. Now with NVIDIA, another semiconductor company, love this company, current value is about $7,000, and I have a profit of over 100% in this one, so I have total $3,000 in gains with a target allocation of 14%. And from there, we have Microsoft with $4,400 in value, up about $1,500 with an 8% allocation. And we got Google, who of course owns YouTube. See a huge potential in this company as well with a current value of $3,700 in my portfolio, up about $500 and a target allocation of 10%. And Amazon is the final one in my technology sector, which I added more recently in this portfolio. Again, this company is basically trading sideways at this point, but I see potential with this one as well because Amazon is extremely diversified and they are a money-making machine. I still use Amazon on a daily basis to buy product, and hey, why not invest in a company that's growing? So this one have a total value of $2,700, down about $111 with a target allocation of 8%. Now guys, we're gonna go ahead and jump into the next one, which is gonna be financials. Now with financials, these are 2 companies I believe in. I used to have more companies in here, but slowly weeded down to these 2 companies because I see growth potential, plus these companies pay out a dividend. So JP Morgan Chase, I have a value of $5,600, up about $1,400 with a target allocation of 60%. And then we got American Express with a 40% allocation and right around $4,000 in value, but up over 100% in this one, and with a total gain of $1,374. Now we are gonna go ahead and jump into the next one, which is gonna be real estate. Now with real estate, have 2 companies in here now. I actually weeded down. I used to have more companies in here. I used to have tower companies, basically cell tower companies in here as well, but I've narrowed down to these 2 companies, and I personally like these companies the best. I have Store Capital with value of $4,200. This is considered a REIT. I have a total gain of $700 with a target allocation of 55%. And then Realty Income, a monthly paying dividend stock, one of my favorite stocks as well when it comes down to a REIT, with a current value of $3,666 and have about $1,100 in total gains in this one with a 45% target allocation. So these are going to be the two stocks in real estate. Now, jumping into consumer staples, have two stocks in here as well, and these are names that are recognized. Costco Wholesales, love this company. This company, again, is one of those companies that's consumer facing, but they have extremely good reviews from their consumers. I have a current value of $3,791 in this one, or up about $800 in this company with a 50% target allocation. Then I got Cisco. With Cisco, I have a value of $3,572, up about $800, or about 48%. And that's going to be consumer staples. Now, jumping to the next sector is going to be consumer discretionary, and we got two companies in here as well, guys. I got Nike and Target, both extremely recognized companies, both large cap companies. Nike have a total value of $4,400, up about $700 in this one with a target allocation of 60%. Then I got Target with a value of $2,700 and have about $700 in profit with a target allocation of 40%. Believer in both of these companies as well. Now, jumping into the next one. The next three pies here only have one stock each. So in consumer services, we have one stock, and that's going to be Disney. Love Disney, love everything about this company. With Disney Plus, this company is diversifying themselves and building another stream of income. So I have a current value sitting at $6,129, up about $300 in this one with 100% target allocation in my communication pie. And yes, guys, Disney is a communication company. Now, jumping into the utility sector. Within utilities, we got Nextera Energy. Used to have more companies in here like Duke Energy, and there was other ones. Can't recall at this point, but at this point I have narrowed it down to Nextera Energy. They focus on renewable energy and they are a leader in that space in North America. My current value is sitting at about $3,100, up about $500 in this one with 100% allocation in this company in my utilities pie. Now, jumping into the final pie is going to be healthcare. In healthcare, guys, have one company. That's going to be Abby. I have a current value of $2,650 in Abby, up about $240, and this is the only company that I have in healthcare. But these are going to be the 35 different companies that I currently hold in my bucket list portfolio. Now, as you guys know, I am fully transparent on this channel. A lot of channels out there, they don't like to share what they're doing. They talk big numbers, but they don't back them up. In my videos, I like to go ahead, be fully transparent, share with you guys week after week how this portfolio is doing. If we're down in this portfolio, guess what? I'm going to go ahead and share with you guys. If we're up in this portfolio, I'm going to go ahead and share with you guys. So I am very excited for this journey, guys. I'm happy we've made it to 100 episodes. It's been a journey and a half. I started this channel over a year ago, but I am very excited to have all of you guys follow me on this journey. If you guys ever have any questions, I do always read all my comments. Let me know in the comments down below, and I honestly appreciate it, guys, and appreciate you guys sticking with me throughout this journey. If you want to see this portfolio grow and you want to see everything I'm doing on a week-to-week basis, don't forget to subscribe to the channel down below. And the only thing I'll ask is if you like this video, and just for this 100th episode, if you don't mind smashing that like button. But I'm gonna go ahead and leave it at that for this video. Thanks again, guys, for watching. Till next time, see you guys at the next one.